on this beautiful day on a Tuesday. So today we're going to be talking about the Great Britain pound. We're going to be seeing these different elements on where price is going to be moving into the near future. So as we can see, that market price has been having this huge consolidation, this spike to the high, and then we can see that right now. I'm going to actually remove some of these Fibonacci retracements, and we'll just take it from the beginning. So first off, we can see that market price. We're going to on the 4-hour chart first off, which is going to be the consolidation area from this low to this high. We can see that this made a peak formation low, which is this structure right here where the market made this peak formation, and then we have the inverse head and shoulders, and we're aware that there is a support area between this level if we're taking into consideration levels at this time. So we can say the level is 12700, and then we can see that another psychological level is going to be tested at this high too, where the support will be here as well. So what we're looking to do now is that we're trying to define where market price is going to go out of, right? Is it going to be a consolidation? Are we going to have a false breakout? Was this a false breakout, I should say, to the high, trapping these bullish traders to consolidate and to move back into a bearish momentum? Or are we going to see a bearish reversal, or a bullish reversal, excuse me, and to test previous structures and moving into a new trend? So what we want to see now is to go down and see what price is showing us as of right now. So I'm really excited to show you guys some of these elements today on where price is going to be moving, where things are going at this time, and also let me just put the chat over here. Sorry about that, you guys. Let me just get this ready for you. So if you guys have any questions as well, please feel free to put them to the Discord. I will definitely be able to answer any questions. So as you can see now that the US dollar is definitely showing, our Great Britain pound has been showing a bearish stop hunt, where we can see that the market has been showing a lot of wicks to the low and to the high. So what you want to see now is if we go to the daily chart, and as we can see the daily chart, we can see that it's still in consolidation between these zones right here. I'm going to map out the percentage and the value of these zones as well, just so you guys get an understanding of the ADR and where we're looking for price to move in the near future. So what I want to see now is price come into this area. As we can see that it's going to have it's in a zone as of right now, and I'm going to map out the pricing of this zone as well, so you guys understand where these zones are actually finished at. So we're about 600 in. If we put it down, we're about 800 pips, but in this zone, we're about 650 pips in the consolidation within this zone. So to break out of this zone, we want to see market price obviously have a nice formations and structures before we see it going into the opposite direction. And we understand that the whole Brexit ordeal was a huge part of why the market is shifting to the downside. But will it be enough for it to not for it to keep on continuing to the downside? That I must say it probably doesn't, right? So right here we can see probably price break to the downside and then break back up. And that's where my hypothesis is as of right now. We can see that the bearish retracement has been nice after we see this huge bullish candle on the daily yesterday, and then we see a market stop hunt, which considerably opened up these pending orders as of right here, and now they're going to hit their trailing stop losses or hit their stop losses for people that are in this bullish momentum. So what we want to see now is price come back to the downside, maybe by the end or March 15th, March 16th, in the next couple of days. We're going to see the retracement, and then after that, we might see in that continuation to the upside, which is a lot of, which would bring a lot of investment money into the markets. Because if we saw, for instance, if we see that market makers and liquidity providers are shorting the market, and we know that with the Brexit ordeal and everything that's been going on with the Great Britain pound, the fear and indication of the market factors are going to the short, right? A lot of people are shorting the market. So if there's a lot of short positions here, right, and they're trapping a lot of these short positions, it'd be smart for them to trap them, obviously enter their short positions, fill their orders, and then next month or in even the end of this month, start driving price the opposite way and reversing it, hitting all their stop hunts and all their stop losses, which then will give the proprietary investors and also market makers and ECNs a lot more money and a lot more capital for their brokers or for their clients as well. So we have to take into consideration market manipulation in this aspect because of the whole factors of what Great Britain pound is doing right now. We can see that the market has definitely made that peak formation. So as we can see, that market is definitely going to look like a reverse to the opposite direction. But we're going to wait for the lowest low to get into this direction. We don't want to go against the trend or go against the range, I should say, because we're not necessarily in a trend right now. We know that the market is in a 50-50, market consolidates 50%, and then it trends 50% of the time. So we have a 50-50 ordeal, and that's how the market is based off. This is the base structure. This is why we have these areas, because these 50-50s are giving us a huge formulation on why price is able to trend and when it's able to consolidate. So that being said, we want to look at treasury bonds as well. We can look at the US dollar treasury bonds. We can see that US dollar treasury bonds is already breaking to the downside. We can see that false breakout here. So what we want to see now is that if price keeps on continuing to the downside for the US dollar, we know that it's 82.6% of all transactions, and also it is 60% of all central reserves. So if the US dollar keeps on decreasing, we're going to have a valued higher currencies, right? Great Britain pound and the euro dollar are the second highest currencies right next to the Japanese yen in sustainable transactions per year. So if we're looking to go into a parallel effect of it, we want to look for a opposite, right? So what happens is that if the bearish continuation keeps on going with the U.S. Treasury bonds, we're going to start to see that the Great Britain pound and the euro dollar will start to hesitate and stop moving to the downside and start moving to the upside as well. And as we can see that we see gold as well is already retracing, making this to a newer highs right here. So, and we can see again that peak formation low, right, with these market anchor leg, which is that support level between that. I'm sorry, I kind of drew that out wrong, you guys. But so we can see that the levels right now of market price are showing that there is a huge continuation for off cross pairs that are not the dollar. So right now I'm not going to be getting into a lot of positions just because of the whole entire just there's a lot of volatility right now, and not just that, is that I don't want to get into a market price that's in the middle of its range, right? We can see that we're in the middle of this range right here with the Great Britain pound. I should have caught, if I was going to catch it, I should have caught it at that high, but now I'm in the middle. At this point, it can go anywhere. So you don't want to be the trader that gets caught up in the middle of a run because of FOMO, right? Fear of missing out. You want to be able to sustainably have that patience, because that patience will give you long-term wealth instead of having those increments that do definitely destabilize your capital when you have these trades that are obviously just trying to make profit. But what happens is that the important thing is that if we're able to catch it at this low, we can obviously increase a lot more capital. So the thing is that if we see this downside momentum, which will give us a lot more validation. Even if we go to the 30-minute chart, if you guys are swing traders, then you can see that this is that whipsaw pattern, right, where consolidation goes to the down, spikes to the highs, and then consolidates one more time, and then continues to the downside. So we have that whipsaw pattern, kind of retest that previous high, almost the spike to the high right here, before it keeps on dropping price to the downside. So if we're going to scalp or use that different time frames, make sure you guys know about the weekly high. Make sure you know about the daily high. Make sure you know about the average daily range for the Great Britain pound if you are trading it, because then you can insinuate and put things into understanding, because then if you have this understanding, you're more confident with taking your positions than just taking them out of thin air and hoping it goes your way, because essentially that's gambling, and we don't want to do that. We want to be speculation investors that know an edge, that this edge is obviously unable to make you profit over time. Not every single time, but over time. Consistency is key in these markets. So when you have these different levels and different elements and structures, the market price is going to be able to give you a lot more percentage, a lot more value. So I'm going to just take out and make it a naked chart one more time, you guys. So for instance, we can go to price, we go to this 1 hour chart, right? And I'll show you exactly how it is to considerably know where price is going to be breaking down, right? So where price would be broken into certain areas, we're going to look for daily high, weekly high, daily low, weekly low. Whoops. Okay, so daily high, daily low, and you want to look for the ADR, which is the average daily range. And then you want to also look for previous week highs, lows. Because the market always loves to break and retest. So if we just use this structure right here and use these elements right here, we're able to define a lot of the markets through scalping, right? So for instance, we can look at this is the 23rd of last month. So if we go to the 23rd of last month, we can see that by the end of that month, we ended up, or excuse me, this was the beginning of the year, right? So this is the beginning of the year. This is the high of the year. So we go to the high of the year, we make a high formation here, and then by February, we're down to the lows, which then market price always likes to break and retest. So we can use this as a consideration that market price is definitely going to go from one low to a high or a high to a low, right? That's why we use that 50-50 rule, that the market consolidates half of the time and it trends half of the time in a micro and a macro perspective. So we can use that 50-50, and then we can use break and retest. So we can use this break and retest to establish where the market is going to go. So we can use these things that we have in Market Maker's Handbook that I gave you guys, a lot of you guys, peak formation low, then you know that's the end of trend, right? Once you see a peak formation low, it's the end of trend. So as you can see, we're in a micro bearish trend at this time. So we're in a micro bearish trend at this time. So we can see that this is the end of the micro bearish trend after we see that peak formation low, which then rose back up to this high, right? So then we're going to see, okay, this is the high of the year, right? We're going to go to the lows, consolidate and break liquidity to the downside, right? And then afterwards, we're going to break out of this because we want to be able to trap all the liquidity that's being short at these positions, and we want to be able to take it back quicker than it did coming down, right? It's called stop hunts, right? Induce the buyers, stop the buyers. Induce the buyers, stop the buyers. Induce the buyers, stop the buyers. Induce the sellers, stop the sellers. Induce the sellers, stop the sellers. That's why the market makes highs and lows. So what happens is that if they use this to formulate price to move into one direction after they have built up enough liquidity, they will trap price in an area and then move it back quicker than it did coming down. Why? It's called a market stop hunt. So in this area, we can see that market price moved above previous highs, or then it made a new high of the year, right? So this is the next. So this is essentially the new high of the year. So what we're looking to do now is price do the same thing. Liquidity trap, stop hunt, hit your trade, hit your stops, and then continue to the downside, right? And then now we're going to look for it to retest its previous low, because market price is either going to considerably go up and back down into this direction, or then price will be able to show more momentum before it moves up, right? Because before a price loves to move out of a direction, it wants to hit a high and a low. It wants to move off it it wants to bounce, right? So as you can see, it hits a high, hits a low, hits a high, hits a low, hits a high, and then it's going to hit a low one more time, retest this low, see if this structure is still valid. If this structure is still valid, then they're going to have this as a support, right? This is the bounce area. This is where the market then will bounce off this area, and we want to get it at a psychological level. I kind of drew this very, very poorly, but you guys understand what I'm saying. Making that W formation, right? So the W formation is what we talked about in Market Maker's Handbook. So what we can see is that this is a stop hunt right here. We can see this is a stop hunt, short position, stopping out those buyers, and then now continue with the downside, retest this previous low, move back to this area, see if it's still valid. If not, it will continue downwards. If it is valid and it continues, then we will see a bullish breakout. So we still have a little bit of time before market price will show us if the Great Britain pound will shoot up to see new highs or lows. But as of right now, we're still short Great Britain pound. The market is still showing this nice support levels. So we can still see that the market is definitely at this time still short. So this is just a consideration, you guys, that we take into this into consideration when we're looking into charts and looking into positions as well. So if that makes sense. So we can see that price is trapping liquidity. We might see one more down spike to the downside, retest this low. After we see this low tested, we can then move price higher and be compatible with the last previous structure, right? So this is where we can be able to make some definite profits, you guys. So if you guys, I know that I haven't had a lot of signals in the Discord lately. I've been obviously working on some other stuff as well, but I'm going to be definitely having some signals here in the near future, giving you guys the best information I possibly can. I'm also going to be doing a lot of screenshots with my trades and stuff like that, so you guys can understand how I get in my positions and how I'm able to, you know, make money when it comes into trading and scalping in the markets. So really happy that you guys are here and joining today's live stream. I know that I have the times a little switched up every once in a while, but I'm trying my best to have a strict time. So I will be here Tuesday through Friday every single day on the live stream and in the live chat as well. So this is what we're going to see for the Great Britain pound right now. We will know if price is going to have a bullish breakout or a bearish continuation in the near future very soon. I just don't want to get into this position just yet, just because it could go anywhere at this time. We already missed that trade. If we were to get into it, we would have got on it in that high, right? We could trade it down, but let's wait until we see a better position on the 30-minute or on the hourly. So if we do see that, then we could definitely get into the positions and see some nice percentage value. So that's our analysis for the Great Britain pound as of right now. We can see that Bitcoin has been definitely in consolidation for a very, very long time. We're going to see a breakout soon enough, you guys. I don't see Bitcoin going higher as of right now. As we can see that the volatility, we can see a spike maybe to the downside one more time. As of right now, price is definitely not looking really good for Bitcoin as of right now. We can see that the spike to the high was already probably exhaust a lot of the market. And then right here, we can see that market price is already consolidating to the downside. So if we do see that, we're definitely going to see price probably move back to a bearish momentum and bearish movement in the near future. But I'm going to keep you guys updated on where I think Bitcoin is going to be going into the near future. I did believe previously that market was going to rebalance to 5,000, but as of right now, I can't really tell you guys that the market price is going to go that high, just because we have such slow volatility in the markets with crypto in general lately. It's been in such a consolidation lately, so I haven't been really keeping my eye on that. I've been just making sure that the market price doesn't break that 4,000 level, which is definitely a huge support level in the markets for crypto in general. So if market price does go higher, we would see it retest 4,000, but as of right now, I don't see it moving any higher. So we can see the same thing with Ethereum. Ethereum has definitely been in the consolidation as well. It's barely been moving ever since that huge spike to the downside. I haven't been really looking at the crypto market that much in the last couple of days, just because it's been very, very, very slow. So I've been mostly focusing on Forex, mostly focused on the USD, Great Britain pound, and the euro dollar lately. But I will keep my eyes very sharpened on the Ethereum and also on the markets as well when it comes to these plays. So going forward, I just want to let you guys know that if we do see a nice break to the treasury bonds for that 10-year, we're going to definitely see an increase with the euro dollar, increase with gold, increase with the Great Britain pound in the near future. Even though we're obviously with Brexit and the ordeal, we should still see sustainable economy, right? It's not really that big of a deal. Most of that was just a hype, a fluctuation of fear and trauma, trying to implement a determining outcome for a lot of these speculation investors. So if you guys have any comments, please feel free to put into the comment section or Discord. I'm so glad you guys were on today's live stream. If you guys have any questions, concerns, any charts or that you guys want me to take a look at for you guys, or anything in that, well, please, you can put in the Discord as well. I'll be there for the rest of the day, as well as helping you guys out with some of the trading material and supporting you guys with the best information I know possible, so we can all have this prosperous journey in trading together. So really excited, you guys, I'll be here same time tomorrow at 2:30. I'll be live again to show you guys more about what's going to happen with the markets, what's going to happen with Great Britain pound, what's going to happen with these different elements. Where is price going to be moving into a new foundation or a new paradigm, or are we going to see it come back into a consolidation and continue with a bearish trap or a bearish continuation? So really excited stuff, you guys. Really happy to be here. Hope you guys have a great day. Brenton out.